Hi, my name is Michael Gilmore and I'm the writer of WhizBang's blog and also one of the co-founders of ParkLogic.com. And today I'm really grateful to have you here with me as we'll be looking at the impact of COVID-19 on the domain monetization side of the domain industry. And this week has been the week I've been hanging out for. Last week we got a bit of a glimpse at what's going on in the next quarters of advertising budgets, but this week is the week where we get a good solid chunk of data to find out what's actually happening and whether all those monetization investors are going to suddenly experience a downturn or not. So it's critical to take a look at this data. But anyway, without further ado, I'll just get things happening and see how we go. So there we are. So COVID-19 impact week 5. So I'm going to go through that series of charts that we saw previously, and we've been doing each of these last 5 weeks. And we're looking, first of all, at the normalized RPM and RPM trends. Now, when we look at these trends here, one of the things you'll notice is there's a dramatic upswing in normalized RPM. Now, once again, normalized RPM is revenue divided by the URLs times 1,000 versus RPM is revenue divided by views, or what the monetization company will respond with is monetizable traffic. And we can see that the RPM dipped a little bit around Easter, which is, to be quite blunt with you, is expected for it to dip, but it's quickly springing back in. I'm looking at the RPM is the red graph, and it's starting to come back up again. We're interested to see what happens in the next week, but the normalized RPM has swung around quite dramatically. Now, this could be influenced a lot by the traffic and how traffic's counted and so forth like that, where we're seeing it. But what we are seeing is there's been quite an interesting swing there. So the earnings per click and click-through rates. Once again, we can see Easter, it dropped off, and with the earnings per click. And then if we're looking at the red line once again, and it sprung back basically straight after Easter. And that's great news for all those investing in domain traffic, that's for sure. The earnings per click is really being fairly static. So it's no surprises just there at all. So the volatility index, I had some feedback from some listeners, also viewers, saying that they found it's a bit hard to understand the volatility index. Basically, it's this. It's comparing the current week overall versus the previous week. So we're comparing a Monday this week versus, say, a Monday last week. So we're trying to compare apples with apples. So if you compare one day versus the previous day, you may have a Monday compared to a Sunday, and Sundays automatically as there's less revenue typically earned on Sundays. So I wanted to do apples to apples comparisons here. And to make it easier to understand, I've highlighted the areas in green. So the green area of the chart just there means we have a positive upward movement. Maybe volatile, but it's a positive upward movement. Anything below that one position on the chart is a negative movement. So we can see right here, you can see it was down a little bit for Easter, and now it's sprung back up into the positive direction, which means we're getting an overall trend upwards in revenue. So this is, once again, it's great news for domain monetization investors. So what's happening in the splits between direct advertisers and also Google? Now, this is the big question. Nothing. Basically, they're exactly the same. There's no difference at all between them in terms of how they performed previously and things like that. When you look at the Google, the percent that Google is taking on board is about 65% and 35% for direct advertisers. Now, if we did it by traffic versus by revenue, then by traffic, it looks very different. Google's taking the vast majority of traffic compared to the direct advertisers, a small amount of traffic, but so they're focusing on these market verticals. And the market verticals, the that they're drilling into, and they're essentially hollowing out, they're performing very well. And we can see that, in fact, I think in the next chart here. All right. So this next chart, now we're looking at the normalized RPM for direct is in red this time, and normalized RPM for Google is in blue. And you can see the normalized RPM for Google is really just catapulted upwards. And there's definitely a trend line upwards also for the direct advertisers. But that last line, like I must admit, those last couple of data points, I know it's only 2 data points, but it's like a breakaway for Google. So it's phenomenal. It'll be interesting to see whether they get revalued backwards or something like that, because that's a cutting edge day we're looking at of data just there. So it may get scaled backwards or something, but it is quite a breakout between the two of them. But don't get confused between these two charts. The direct advertisers are using the left-hand axis, while Google's using the right-hand axis. So the direct advertisers are paying about 10 times the amount Google's paying for the traffic. 10 times. Now that's huge. So if you don't have direct advertisers in your mix, if you don't have direct advertisers in your mix, in other words, you're putting everything into a typical parking provider, then you're losing massively on your traffic. You've really got to look at that if you're not doing that. Feel free to reach out to us at ParkLogic and to ask any questions you may have. There's Matt or myself. Be very happy to have a chat with you about that. But like seriously, if you're putting everything in one place, then you're losing money. And if you don't have direct advertisers in the mix, you're definitely losing money. But more than that, quite often you need different mixes of direct advertisers as well. So there's a lot of moving points and stuff like that in this. But anyway, so let's get back to our charts. So what's going on with volatility though? On the direct advertisers versus Google, and we can see once again they're both they sprung out of the Easter doldrums, and you can see direct advertisers really had an Easter downturn, and they really launched back out of there, which is good. Although that last number there for Google, which is in blue, be interested to see whether that's going to be sustainable. If it is sustainable, that's great news, and something you're pretty happy with. Now, a couple of things to say about all this. Remember at the very beginning, in COVID-19 week 1, I was saying everything looks great, but I'm nervous. I was really nervous. Like I was thinking, like the next quarter, we're going to see the budgets come in, they're going to be slashed, and there's going to be a calamity hit. We're going to have like a 40% downturn, so almost like the GFC back in, was it 2008? And so I was very nervous about that, but now we're seeing in this next quarter is that hasn't happened. And why hasn't it happened? I must admit, I've been thinking about this quite a bit, and I'm not quite sure why it hasn't happened. I can only speculate. As I mentioned in the past, one of my speculations has been that the slack of a lot of these major advertisers like Amazon, I think, announced that they're going to take stop all their online advertising. The slack created there has been taken up by small businesses, and all these small businesses where they had these little stores and everything like that selling their products. They're still wanting to sell stuff because they got to get some money in, and they're thinking the only place they can go is online because you know what, the audience has gone online. And that's great news for monetization companies like ourselves, because we're seeing an uptick and we didn't see the downward trend. What I don't know is going to happen is what happens when these big advertising agencies and also advertisers start to come back on board. Are they going to suddenly enter the market and then EPCs continue to trend upwards? I don't know. Are we just seeing the tip of the iceberg here with some of those Google numbers? And that's going to be the interesting thing next week, is that I just don't know what's going to happen. And I'm a numbers guy, and I love my numbers. And so I wonder what will happen in the coming weeks unfolding. But there's one thing I do know that's happening, absolutely categorically beyond anything, and that is people are suffering and people are dying. I'm seeing the numbers from around the world, and it's just terrible. If you're have experienced suffering in any sort of way, or a family member, a friend has, then my prayers are with you. And if you haven't experienced anything at this stage or anything like that, like, I think we should just count our blessings. My wife was looking at. I was talking to a nurse who was actually happened to be on the COVID-19 emergency ward, and she said, "You do not want to get this. You do not want to get it. It's not a very nice disease to get by any stretch of the imagination. Not that any disease is nice, but you do not want to get COVID-19. So my prayers with everyone, particularly for those who seem to be suffering in the United States. I know New York has been, and that the East Coast region there has just really been suffering. And I pray for the leaders in those areas that can lead the people, and also the people themselves. Keep that distancing, social distancing, washing your hands, doing all those sort of things, and highly recommend that. But anyway, keep safe, everyone. I really look forward to seeing you again, and that these travel restrictions come off us all, and we can once again be the great industry we are in the domain industry. Take care. See you later. Bye. Hi, I hope you enjoyed that video and that you find this information that I'm providing through my blog and through these videos really interesting. Don't forget, subscribe, whatever you subscribe, so you don't miss out on the next installment I'm going to be releasing. Or you can click on the push alerts on the website. So either two, but anyway, thanks a lot. Bye.